Hello and welcome to part 4 of this tutorial series on how to use the DIY budgeting sheet on Fiverr.com. Uh, this is part 4 and we're going to be discussing what to do next according to the frequently asked questions on Fiverr. This one says, I added all of my pay periods for all the months. Now what? So we discussed already how pay periods work, what to do if you're paid biweekly or monthly, etc. Now we're going to be discussing what to do next. So next, you want to start is with your incomes, and that is pretty simple. All you really need to do is start in January. If you are doing this from January, the beginning of January, then start here. You want to put what your bank balance was at the beginning of the pay period before your paycheck for that pay period. So this is actually what you have and before pay period 1 starts, this is what you had right before your paycheck. So if you're paid every Friday, which is the most common scenario that I encounter, what that means is that you want to put the balance as it was on January 6th, Friday, right before this paycheck gets credited to your bank account. So let's say you had $1,200 in the bank account, and then that same Friday, you got $700 for your paycheck. After taxes, you want to do after taxes because that's what you actually have. And that is how you do it. You have to add in just for the beginning of the year, and then the following pay periods are automated. There's formulas here, you do not want to touch them. So that is how you do your balance for the beginning. Now your income is going to you can actually edit your income for each pay period. So if you're paid every Friday, for example, $700. But let's say, however, you got some like tips or you have a side gig or something and you make some extra money. So let's say it's like I don't know, $962 or something like that. You can change it per pay period, and that is perfectly fine. But if you're paid consistently the same all the time and it's predictable, I recommend just putting in your income per pay period for the entire year. And don't assume you'll get a raise, because I figured that worst case scenario is the best way to go as far as budgeting goes. So that way when you do get a raise, it's actually, oh, you actually have extra money. But that's what I recommend as far as putting in your incomes. Now, let's say you bought this sheet and it's not January, or you're not even close to January. Let's say you're starting in I don't know, July. In that case, you don't really have to touch this, really, actually, because what I recommend doing for your income, let's say you want to just start your budget at the beginning, the first pay period of July. That's where you want to start. And that is perfectly fine. You can do that. So it looks like for this year, the first Friday is actually going to be on the 7th. So what you want to do is you want to find out what your bank balance was before your payment was put into your bank account, right before your paycheck. You want to find out what that balance was right before your paycheck, and then you want to put it, and then you want to see what is auto-populated here, and then you see some weird stuff. You don't want to don't move this. Don't edit this number. Don't change it. I don't recommend doing that. Unless you have a backup of this budgeting sheet saved somewhere. Just what I recommend doing instead is, let's say your balance is I don't know, 1,500 and not 2,515. So what you can do is you can say, okay, so I have to subtract by 1,015. So I go to June, and it doesn't even matter really. As long as it's before July, it's fine. You can put it anywhere. Just put 1,015, and then there you'll notice now your balance is set to 1,500. I just recommend. I mean, you can type it in there if you know what you're doing, but it might mess things up a little bit, and I don't suggest risking that. Just go ahead and put some kind of adjustment before July if you're going to start in July. So yeah, that is how you do your incomes using this budgeting sheet. And on to the next FAQ.